Are we in a market priced to perfection? According to the latest data we have, dark pool activity is starting to rise once again, and in today's video we need to talk about what's happening ahead of big tech earnings. As the S&P 500 almost hits the trend line and breaks to the upside, and some cryptos go absolutely wild such as Ethereum, what are the CTAs up to, the commodity trade advisors? Well, one thing's for sure, there are a lot of opportunities, and in today's video we'll discuss them all together, including what's happening in stocks, commodities, and cryptos from both an investor and trader's mindset. Guys, don't go anywhere, there's a lot to get into. Let's do it right now together. Well, welcome back everyone to The Daily Show. My name's Tom, and boy oh boy do we have a lot to discuss. The latest macro, the big data flows, and of course, what exactly is going on with dark pool liquidity. It looks like we had a couple of big hits over the last 48 hours, and of course, we need to discuss it together. But let's kick things off here with the retail sales numbers and whether tariffs are starting to take hold. So we've discussed before that tariffs tend to show up really more around 4 months or even upwards of 6 or even 9 months after they actually are implemented. And a lot of this has to do with inventory. As you guys know, retail inventory tends to be around 3 to 6 months. And because most retailers knew that there would be tariff implementation, some of them are holding between 6 and 9 months right now. And what this is showing up in, it seems to be that people are going out and buying stuff ahead of these tariffs. And this is the normal human psychology that happens. Motor vehicles in particular, it looks like everyone's trying to keep up with the Joneses. And some of you guys in the community have actually already recorded. You work in literally the car or automotive businesses, and you're saying that everyone's buying on leverage, effectively taking out big loans to realistically have that new shiny car in the driveway. On top of this, we see some of the early signs of tariffs taking effect in furniture and home furnishings and electronics and appliance stores. And the reason we know this is because these tend to not be held as much in inventory. And we're already seeing some inflation coming into appliances and household furnishings. And that's going to limit, of course, demand. As prices go up, less people are going to purchase them. Now that's going to be a story for the future. Of course, you guys know that if you're talking about black swans and problems in the economy, yeah, markets can start to become more rational by the moment, and of course, they can really hurt your human psychology. But at this point, we're still in a bull market. Remember that, yes, nothing like this has taken effect to actually affect everything right now. So let's talk a little bit about price to perfection. As you guys know, the Q2 for Netflix kicks off earnings season. And while TSM was very nice, and of course that's good for chips, we're starting to see the signs of price to perfection show up in the volume data. That's right, big dark pool starting to come through. We'll look at that in just a moment. Gross profit was up, operating profit was up, and net profit was up, but it wasn't enough to keep the markets going. And as you guys know, in after hours, we actually saw the price of Netflix drop around 2%. Now, could this be the beginning of a larger transaction? This is now the number 1 and number 3 largest transactions that we've seen over the last kind of 10 years for Netflix, and it all happened just before the earnings announcement. Is it a sell? We don't know yet because, of course, we have to see another 24 to 48 hours of price. But it does look like the initial transactions were to the downside, and this could be something more of what we're starting to see here into this earnings season. That is something that's rallied so heavily up that you really need to have exceptional earnings. And although we have them, yeah, sometimes the market will do that irrelevant thing or that thing that doesn't make sense to most retail traders. Remember, always look at the left-hand side. We do that here on the channel, and if you like that type of stuff, remember to subscribe and smash the like button. So guys, what are the good news bits? What are the bad news bits? Well, first up, good news is that CTAs suck. Now, why is that true? Well, because they are behind. They are totally behind in their purchasing of this rally so far. Retail traders, well, you guys are all in, but it looks like CTAs need to double their equity exposure according to the latest report from UBS. And this is over on our X account, links in the description down below. And if they don't do it, then they may be totally left out of the kind of, rally that's been going on so far. And although we do expect, of course, a potential here for a sell-off in the next few weeks to the Q3, Q4 area, it does kind of help underpin a buy the dip style rally. Now, there are some other concerns as well that we've brought up. FMS cash levels have dropped under 4%, which tells us that we need to be a little bit cautious, maybe having things like some powder dry, some scalability, potentially scaling lower in terms of takers of profit off the table, what maybe Wall Street traders are going to be doing because we're hitting the trend line. And this chart tends to be relatively correct. Remember, the last time we actually saw it was February of 2025, and soon after that, markets fell. Doesn't mean it's going to happen, but it is a warning sign. In good news, we have liquidity pickups for certain markets. Now, on the channel here, we talk about it all the time, abundance mindset. Why is it so important? Well, of course, when we have abundance, we can find other opportunities. And while everyone's been going on about hypergrowth stocks and, of course, rallying the RKs and the Cathy Wood style funds, what we actually are seeing is a bit of a pickup here in liquidity, according to the latest cross-border capital read. And this is pretty cool because what it's leading into is exactly what we've been discussing, a series of higher highs and higher lows on the Chinese markets, and they've reached that precipice right now. The largest trade was a little while ago, but the second largest just happened recently on the July the 9th, and since then the markets are actually up. In fact, yen is up about 12+% now in overall trade volume and percentage, and you guys know that this can often start a bit of a rally. The thing about China is when it breaks out, if it does over the next couple of sessions, it tends to go ballistic. Now, as we mentioned, there are good bits of news, there are bad bits of news. One of the bad bits has to be decline in liquidity of government bonds. Now, we do know that there are a whole bunch of financial restructures coming for a lot of small businesses. But on top of that, we've also got a huge amount of Treasury T-bills that need to be rolled over in Q3, Q4, and of course Q1 of 2026. And when you think about how big the old ones have been, these are the biggest of all time. So we do know that people are concerned about the liquidity of treasuries, and there's going to be a lot needed to be written. Are we going to see higher for longer rates? Well, this is a story that's going to be unraveling over the next few months. We will be covering it. But just remember, this one here is not an instant, oh wow, sell. It's something in the macro that you have to understand exists. And you have to say, okay, I know that's there. It is certainly a worrying sign, but until it cracks, I wouldn't be doing too much. Why? Because it doesn't tend to be one of those instantaneous, sell indicators or anything like that. It's one of those ones that's lingering in the background. Particularly something that is also lingering seems to be this maybe under the horizon, I guess you would say not in the news so much, move swelling here for commodities. And commodities are starting to be purchased up by some of the smartest businesses. We just saw Google kind of say, we need energy. And it seems to be that the new hot thing for AI, and I agree with this by the way, is that you need to actually secure the metals, the minerals, and the land and energy for the future. And this is the new potential boom. So according to the latest data here from top-down charts, if you take out gold, and you think about gold and silver being the beginning of a commodities rally, then that makes the rest of the hard commodities relatively cheap. Now, for anyone that's actually ever traded commodities, you guys know it is difficult. And what that means is that the timing is everything on this. But could we be seeing this massive swelling of demand coming back in? We've already had uranium, which has been one of our favorite energy plays over on our private community, and of course other particular little nuclear reactors and stuff like that that people have been getting into in terms of stocks. These have been going gangbusters. I mean, they're being absolutely making new highs on new highs on new highs, and they look like hypergrowth stocks. At the same time, are we seeing everything else kind of rally that could be around the corner? Particularly iron ore I'm watching, and it's not because I think iron ore is good, it's just that if it breaks out, that generally means that all of the hards are going in the right direction, I guess. Now, Christmas in July certainly happened this year. We talked about the 15th of July being a potential catalyst. That was the big banks coming out. And we did see that XLF was, again, priced to perfection. The markets were up so much that as soon as all these banks said we made record profits, it's all great, it's all green, they started to drop. And this is, of course, the real discussion here into big tech. Okay, the chips are doing well. That's a good check mark. But will we see the rest of the market actually hold up? The now markets are holding, the now markets trying to hit those trend lines, but this year could still be choppy. So remember, year threes, the torus, the up, down, all around, That's what we knew in 2024. That's what we currently know here in 2025. The good other bit of news though is that generally when you get highs, which we do have now, even if we get pullbacks, who have we got purchasing? Hedge funds, CTAs, and of course, when you only make a couple of new all-time highs, we're at about 10 now, then you usually see clusters of them. So we could be going up to 30 or even 60 all-time highs throughout the rest of the next 6 months, 12 months, because that's what tends to happen when you get these periods. So remember, all-time highs may look to some people like, oh, it's all overbought, but in general, you do want to be following that trend. And remember, markets are more inherently bullish than bearish. So while we are at that correlation point that we've been talking about, and I don't think it's a bad time personally for myself to have a little bit of powder dry, it doesn't mean that it is going to crash. You don't know that. You don't know it's going to pull back. You just bring the data and the stats together, and of course you try to build that evidence case. Now, we do have a couple more earnings here for this week, but next week's the big kickoff, so make sure to subscribe, and we will continue to bring you the implied movements. I want to do a bit more work on that over the next week so we can see what has happened in the past for a lot of these earnings, e.g. Netflix, e.g. others, and how, each earnings season and each quarter actually stacks up with each other. Some are better than others. Latest Goldman Sachs report shows that these are the crowded trades, both short and long, so these will be worthwhile watching when it comes to this earnings season. Let's now jump into the charts, have a look at the S&P 500 before we go to the options flow. And you guys know that this trend line is something we've been looking at for a while. Now, we haven't hit it on the S&P yet. That's going to be around 6350-ish zone. And what you guys know is that 6300 is a huge call wall. Where did we close? 6297. We actually are trading currently at around 6310-ish. Although, it's one of those things that can change very, very quickly, but we're starting to push a little bit higher. And if you're looking at technical analysis, you would say, okay, here we had the Jerome Powell fumble, so where basically, Trump said, oh, I might kick him, and then, oh no, just joking.